Hello and welcome. Good afternoon. We are back with another conversation, and today we are going to be talking about gold. Well, a metal that kind of ignites emotion among so many Indians. You're with the Economic Times, and my name is Ashutosh Sinha. As the economy gathers steam, it's an important time to discuss the topic, the golden truth, brought to you by the Economic Times. Gold resonates with just about anyone in India. While traditionally it's been the women whose jewelry has been driving the industry, the men also wear some jewelry, and that is a market that jewelry companies have always had their eyes on. As the second largest market for gold, the government would like the industry to be regulated well so that all interests are well taken care of. Just for a little bit of perspective, what's been happening in the industry, the entire gold and, the jewelry, the gems and jewelry industry as it's called. India's gems and jewelry industry has been one of the biggest in the world. From April to October, and that's the data from the government, the exports of gems and jewelry has doubled, and we're talking for the current financial year, and stood at about a little over $23 billion compared to about $11.7 billion for the same period, that's April to October in 2020. That's quite a jump. But in the corresponding period for 2019, the figure was at tad over $22 billion. And that's all the Commerce Ministry data. If all goes well, the industry could do better than the years before the pandemic hit us. So there are three sides or three addressable segments that the government policy needs to address or would like to address. The first, and I must insist that I'm speaking in no particular order, is the consumer. The second is the industry or the trade itself. And the third is the government policy that is also as critical a factor. When all their interests are well taken care of, well addressed, it could help the industry grow as well. That is why we're calling it the golden truth. To talk about the various aspects of the golden truth, if I may say so, we have a set of people who represent the views of the policymakers, industry, as well as the consumers. And when I say consumers, it's not just talking of the people who buy the jewelry, it's also people who invest in gold. So they're an important segment whose views or whose interests need to be taken care of. So let me introduce the guests for today. We have Mr. Gopal Krishnan Pillai, former Commerce Secretary, Government of India. Thank you, Mr. Pillai, for joining us. We have Mr. Colin Shah, Chairman of the Gems and Jewelry Export Promotion Council. Thank you, Mr. Shah. Mr. Harsh Rungta, he's Investment Advisor, Fee Only Investment Advisors LLP. Mr. Ashish Pete, Chairman of All India Gems and Jewelry Domestic Council. And Mr. MP Ahmed, he'll be joining us. He's Chairman Malabar Group. And we also have with him Mr. Dilip Narayan from the group who will be helping Mr. Ahmed as we go along. So let's start with the questions. Thank you so much, everyone, for joining us. Mr. Pillai, if I can request you to give a broad picture of the last decade or two, what it has been like for the policymakers, particularly because during this period, the import duty for gold has moved from up to down, and again, it's been inching up. Little bit worries for the industry as well as the consumers. If you can help put a perspective to this.
Well, for the government, gold, as you know, the gold standard is there. We all know that in 1991, when we ran into the balance of payments crisis, we actually had to airlift gold to London to literally ensure that we were not declared bankrupt. So gold is important for the government. And the import of gold, because we are the second largest importer of gold in the world, large imports of gold always affects the balance of payments. And therefore, it's a problem for the finance ministry when they're trying to balance the budget. The other aspect, which is equally important, is that gold has very sentimental, Indians are, in the world, possibly we love gold across the rich, the poor, the middle class, anybody. Gold is there, and it's seasonal. The seasonal fluctuations are there. So every time import of gold comes in, both regularly through the regulated channels after paying the customs duties, and you also have smuggling of gold because you have a very large porous border. There's smuggling which takes place through ships, and there's smuggling which takes place across almost on every international flight. Gold, anybody wants to come in, they try to bring in and smuggle gold. You see these seizures taking place all the time. So it's important for government, and that is why one of the reasons why you have this extreme fluctuations in the import customs duties on gold. But every time there is a surge in imports of gold, government wants to curb it because it affects the balance of the trade deficit, and therefore you have this seasonal fluctuations. Gold has come down, I think, from over 3%, it's gone up to 10% plus. And currently, I think, if I'm not mistaken, it's about 7.5%, but you have a 2.5% AIDC cess. So it's about 10%. And government does, the tariff values are literally moderated on a quarterly or even a fortnightly basis to ensure that it matches the price of gold in the international market. So you have this. I'll stop here.
Sure. So the industry's views as well, we'll get to that. And let me start first with Mr. Pete, if you can put a perspective of what does it all mean when we have that little challenge of the way prices will be, and of course impacted because of the way the grey market operates. What challenges does it put before the industry, Mr. Pete?
Sorry, Ashutosh, could you repeat the question? The line here is a little dicey.
Sure. So I'm saying, what are the challenges it presents before the industry because of, one, the government policy, the way, do we have a long-term direction? And second, because of the grey market and the way it impacts the industry.
Right. I think the government policy currently is moving in the right direction, in terms that a few years back, they have classified gold as an asset class, which was required for quite some time. Secondly, the work on international bullion exchange as well as the spot exchange. Both these things are moving at a quick pace, so which will formalize the bullion trade in India. And number three, they have revamped the gold monetization scheme, which was overdue. Although we have some comments on that and we want some modifications, but these three things are policy changes which I think are positive overall for the trade. Besides that, hallmarking, mandatory hallmarking is kicking in. Myself, Colin Bhai were there in the expert and advisory committees. So there is some work that needs to be done before the whole country comes under mandatory hallmarking. But I think the overall direction is right. Only the ground level, I would say, fine tuning needs to be done. For example, I will give you in gold monetization scheme, what we have suggested that for common man to invest, say up to 500 grams, there should be no questions asked as to the source of the gold, because we have Stridhan coming in, we have generations of accumulated gold, we have gifts coming in to the family at the wedding time. So these kind of things, if questions are asked, the ladies or the household is little dicey and feels dicey about, investing in gold monetization scheme. So if you weigh both questions being asked and investigating a 500-gram deposit versus the benefit that it will accrue for the nation, I think the other one outweighs. So that is there. Secondly, even in hallmarking, we need a lot of fine tuning to be done at the ground level because we need a law which is easy for compliance if someone wants to follow it, but difficult if someone wants to break it. So that for that, me, myself, Colin Bhai, we are all working with them. Now, coming to your gray market question, how it is affecting the trade. I think at the consumer level, consumer facing, the import duty does not have any relevance because the end consumer is just concerned about GST. So whatever is seen on the board, the rate and the GST that is applicable. So that way the consumer is not at all concerned. What affects is if the gray market, because if the difference in the duty is substantial, and from the porous borders, if gold starts coming in, there is clearly 8 to 10% difference. And at the rate of almost 50,000, we are looking at 4,000 rupees per 10 gram. So then it incentivizes people who are doing unscrupulous things to come in. And then customers hear this and then they start worrying, idhar sasta mil raha hai, udhar sasta mil raha hai. So that creates an issue. And people like us, Ahmad Bhai, people are doing organized business or people who are doing genuine business, they get hit because they are sitting with their expenses, they are paying all the taxes, but someone else is taking away their business. So that's why for last many years, we have been suggesting to the government to reduce the import duty. According to us, I think council, we feel about 4 to 5% is a fair enough import duty, which will not at all incentivize people bringing in gold, and it will give good enough revenue to the government also. That is my first thoughts.
Sure. Mr. Shah, if I can come to you and ask you that the industry, as Ms. Pethe was also mentioning, wants the import duty to be down. If you can explain, how does it help the genuine part of the industry, the organized part of the industry?
Thanks, Ashutosh. So, see, gold generally, if you do a comparison, I guess with our neighboring countries, like especially China, or you take maybe the top 25, ranked GDP-wise nations, India is the highest taxed when it comes to duties and GST put together. Okay, so most of the countries have gone for a scenario where the duty is as good as zero or very close to zero. The reason being that gold today, I mean, believe it or not, it's like any other currency, right? It's more, I would say, liquid than even stock that you buy, because you can liquidate your gold even at 12 in the night or even on a Sunday or any other time or day of the year or week, and that has been traditionally so. From the day maybe gold was historically, I guess, born thousands of years back, right? So it's very firmly entrenched in cultures globally that gold is a currency or as good as a currency. So having said that and keeping that as the background, having a high import duty in India doesn't serve us to become a larger part of the global economy. If we want to be a larger part of the global economy, and I think the government, I guess even speakers before me have said, have taken several steps in that direction. So now we have the gold exchange, which has come up, where, and I'll just take, a few minutes on each of these different initiatives, if I may.
Sure.
Okay. So you take the exchange, for example. Okay. Now Brexit has happened. London Bullion Exchange was obviously the largest exchange in the world. But the minute Brexit happened, the Shanghai exchange has come up very nicely for the Chinese part of the market. And China is the largest consumer of gold today. But India is the second largest consumer of gold. So with this exchange, we have the opportunity of not only importing all our gold through this exchange, for the Indian market, but even have the opportunity of being the exchange globally. Okay, which So I would say that's say one part of the journey. Second part of the journey is you take hallmarking, which has become mandatory for the most part, but of course not countrywide. But say hopefully that happens soon. We have the chance now of exporting like the Prime Minister's vision from every district in India. Now, how is that going to happen? If we see, one is our domestic economy, and second is if we want to be a larger part of the global economy. If we want to be a larger part, we can have, we can't have such high duties, okay? Because that makes us automatically not competitive. You take the 5 million or 10 million NRIs that we have, and I'm sure Ahmed Bhai will probably have the correct number, but since he has such a large global business, but we have NRIs in every maybe 200 countries in the world, okay, and they all have weddings every year, and they all would love to buy the Indian jewelry which we have culturally in their culture and have grown up with, but they don't buy in India because of the high duties. So they'd rather go to Dubai or some other destination where gold is at 0 or close to 0%. So I'm saying that is one opportunity that we have, low hanging fruit, just selling to the Indians globally. Second is, why not sell to even the Westerners? Because we have such a large domestic economy, it makes it easier for us as a manufacturing setup, and with the 100,000 retailers that we have across the country, to just be like the gems and jewelry destination of the world. Okay, for example, and we say this in all our ministry meetings, when you think of wine, you're thinking of France. When you're thinking of cheese, you're thinking of Switzerland. You think watches, you're thinking Switzerland. India has the opportunity today of being the gems and jewelry capital of the world. When anywhere in the world you think gems and jewelry, you should be thinking of India. But that will only be possible if we have competitive duties, competitive GST, hallmarking, a robust gold monetization scheme. Everything needs to be easy in the true sense. These countries which have built these global products, it hasn't become by accident. It's because the country also really helped them with policy. Today, Silicon Valley, because of the progressive laws in California. So that's very essential if we have to truly become the global capital for gems and jewelry. And if we want to be known anywhere in the world for this one product, and this is actually, believe it or not, see, India is known for services. Okay, we are the largest IT exporter, but again, over there, we don't have a product which we're known for. In gems and jewelry, we have the opportunity that, without a diamond mine, we are the largest diamond producers in the world. Without a gold mine, we are the second largest, market plus largest producer of gold jewelry in the world. So we have this opportunity, and, if the government helps us in the journey, which they have helped, I would say, in the last few years, it will help us realize our dream and global ambition. So that's just the background on this duty topic.
Mr. Ahmed, give us a sense, what steps would the industry or the trade want the government to take to ensure, one, compliance, and second, also about the larger picture, realizing that ambition, as Mr. Shah mentioned.
Well, thank you. The Economic Times, the organizing the panel discussion about gold industry, India and taxation policies on gold. We are accepting all opinions.
Yeah. So, good evening, everybody. I mean, as I got introduced myself before the session, I'm Dilip Narayanan on behalf of Mr. Ahmed. I handle the bullion division for the Malabar group. So, Chairman is thanking the Economic Times for organizing this panel and discussing about the gold industry and taxation policy. And we welcome we have a warm welcome for bringing up this topic which is one of the important topics which the industry require at this point of time. So gold policy initiatives of Government of India and its effectiveness has been very much welcomed by our group. You would have seen us in different panels be talking about it. The chairman has been very, very vocal about this in all kind of medias whenever we have got an opportunity. So we would look forward to hear from the panel experts and deliberate our thoughts on the subject being a market player. Okay. Now coming to your question, can you repeat that question once again, Mr.
Yeah. So the point was, what would industry like to see in terms of the way government can improve compliance across states And also the second point, realizing the ambition of being, if I may use the word, the capital for gold jewelry, global capital.
So basically, as everybody in this panel had mentioned, we have the same say to go. The government of India first can lower the duty immediately on the interest of the economy. Okay, and rather than waiting for 2 to 3 years to slowly actually bringing it down step by step, it should not prolong and then bring in substantial amount of duty reduction and also GST for that matter. Encouraging recycling of domestic gold to avoid current account deficit. That's something which Mr. Shah also mentioned and Mr. Pete also mentioned. That's something which we have been also been talking about. That helps the GDP of our country. So the gold demonetization, the GMS part, that's a robust GMS scheme. Okay, that's something which we are looking at, and I'm sure with all the with the new corrections which has happened in the GMS part, I'm sure that we will be adding up more deposits, which will really help in to bring in all the gold which has been lying unaccounted for. So that's one of that. These are the steps which the government should be. Of course, the hallmarking is definitely another one mandate which Mr. Pete and people like Mr. Shah has been, they have been in the industry leaders trying to bring in that, streamlining it. And we're seeing a lot of difference in the industry due to these changes which is happening. Of course, the HUID, when I say hallmarking, it adds on to the HUID part.
Yeah, sure. We'll come to the HUID part. Also get Mr. Rungta in. Mr. Rungta, as an investment opportunity for HNIs, how does gold present itself as an opportunity? We have the options, of course, always, the physical gold, but the digital part of it is also emerging, and that's a fairly important opportunity today.
Oh, absolutely. I think a consumer/investor would have different factors that would affect when he's looking at gold as a consumption item and when he's looking at it as an investment item. Absolutely, it would be a little different. I think all the action that we see so far, and a lot of it is still to sort of become visible, whether it is the spot exchanges, you spoke about the HUIDs, and whether it is we are in early days even on our sovereign gold bonds or the gold monetization schemes, etc., etc. So I think we are in pretty early days, but very clearly it is moving because what does an investor want? Like any other asset class, the investor is looking for risk return, the trade-off between risk return and liquidity. Now, in gold, as they mentioned very clearly, liquidity is a sort of culturally and traditionally always been there. Okay, the risk return trade-off is pretty decent over the long term. The main thing is that it is negatively correlated with equities, which means it serves as an excellent diversification tool. So even if you are not affected by the cultural implications of owning gold, or you're not really drawn by the allure of gold, simply as an asset class, simply because it is negatively correlated to equity, it has to form part of your asset allocation. What it should be, whether it is 5%, 10%, or more or less, I think that depends on an individual investor. And I think it is here that the action is happening, which was long overdue. Whether we didn't have a spot exchange. You didn't have a place where you could be assured that if I'm buying something which is said it is 24 karat gold, okay, is 24 karat gold. Okay, so I think all this action that is happening in terms of traceability, being able to trace back the entire thing, that brings down. all kinds of things are happening on the investment side, I think, which bears well with gold as an investment asset class. Mainly the fact that it is negatively correlated with equities. Both are volatile and both are negatively correlated.
Okay, that's tell a woman about gold as an investment opportunity. I'm not sure how many women will be convinced, but I must admit, I must point out to all the women who are watching, or even the men, if you want your questions asked to the members who are speaking today, please feel free to put them in the Q&A tab, and we'll try and take them to the important people who are with us, so that your question can be answered. It could be about the industry, it could be about possibly, we'll try and avoid the investment part of it, but well, some part of it we can address as well. Mr. Pillai, let me come back to you while we wait for some of those questions to come in. Wanted to understand, what is the thought for the government? While revenue is a very important consideration and it cannot be looked over in any way, how does the government think in terms of, or what is the thought process behind the way the duty structure moves?
I think the first important thing is, which I always believe that is important, because if you don't have a roadmap, you'll take ad hoc decisions. 3 years ago, the finance minister announced a gold policy would be made. 3 years have passed, you still don't have a gold policy. If you don't have a gold policy, everybody reacts on an ad hoc fashion. So I think you must have a gold policy which must be announced, which will say that the import duty on gold will be 3%. In fact, I was surprised that they're talking of 4 or 5% the industry is willing to accept. I remember when I was in commerce, we were actually looking at a 3% customs duty, all told. Not a gross customs duty on imported gold should be 3%. Then you have hallmarking, you have the exchanges which will come up, you'll have all the gold monetization aspects, from sovereign gold bond scheme to gold monetization scheme. All that will come in, and you have to say that this is all going to come in within a period of 2 years. And once you have that, then irrespective of whatever happens, this will take place. Otherwise, it's ad hoc decisions at every level. Everybody is looking at it. Suddenly, a balance of payment, something goes, you have a problem, then you say, okay, let's raise the import duty on gold and make a few thousand crores to offset some additional expenditure which I've got because of COVID-19 or whatever it is. I want to make 10,000 crores or raise the duty. Or I've got, like here, you've got the agricultural infrastructure development cess. I don't know why gold should be the source for making that, without realizing that that has a long-term impact on the whole industry itself. If you want to be the gold capital of the world, then you can't say that I'll put agriculture cess, tomorrow you'll put some other cess. And so the policy has to be very clearly enunciated. It says that no cess will be put on this thing. You bring it down to 3% by 22, 23. That's it. 1, 2, 3, 4, 5. And you say that will be done. No changes to that, and see how it goes. And you will get fluctuations. You will get some worrisome trends, maybe some increase in imports and so on. That you have to bear. We've got enough, foreign exchange reserves, etc. We should be able to balance that and move forward. And the industry has to, of course, equally support this. That's the only way it can work forward.
So let's also try and understand, and Mr. Shah, if I can come to you, understand how does it change the economics for the industry? If you can explain that, the higher duty structure vis-a-vis the lower duty structure.
When you say economics, what do you mean when you say economics?
So the industry economics. So if you are adding, let's say from, okay, the percentage import duty was 3 or 4% earlier, and now it's inched up to about 7.5% plus the agricultural cess. That makes it it incentivizes the gray market, and the demand for gold and jewelry through the official channels, I'd suspect, goes down as well. So how does that economics work, if you can explain?
Ashutosh, see, I'll tell you very honestly, what happens is not only in gold. Say you tax any product in any country, okay, on a higher level. What will happen? There are three repercussions which will happen, which any say economics professor will also tell you. One is that you're going the Atmanirbhar way, right? Where you're saying that do not import this commodity, try and manufacture, mine, whatever in your own country itself. That's one. Second is you're saying that because you're heavily taxed, obviously you're not, competitive in the export market, right? And you're only selling domestically. And thirdly, you're, even affecting the consumption, because it's like, say, imported cars. You have 250% duty. So, where one is, so it's all these factors, right? The country is trying to say that, the consumer in India should not use imported cars. Okay, because, you're taxing them either because we don't have roads, or secondly, we don't want them to use that, or we are trying to send a message to these foreign companies that, like, for example, Tesla recently, that you can only sell Tesla in India, that, if you manufacture it. So one side we are saying we want to go green, but, we are also saying that they should be manufactured only in India for us to go green. So if you take a combination of all this and run a parallel with the gold industry, it all depends on actually what the country's focus is. One is that if you're saying that we want to be an exporter, and earlier, if you remember the message from, the Nehru times was export or perish. If you recollect, that used to be a buzzword at that time, export or perish. So if we want to be exporters and we want to encourage, every jeweler in every district, every city in India to export, then we'll have to make it competitive. So the economics is that, if we want us to be an exporter, we have a robust e-commerce policy which allows us to, ship to any country in the world in the most cost competitive manner, right? Because e-commerce is all about cost and speed. So unless that happens, unless we are competitive, so the economic fallout will be that, one is there'll be huge job creation, right? Because obviously if you're manufacturing and exporting all over the world, your industry can double or triple in size. So today we are at, say, $35-40 billion. The potential is to grow to between $70 to $100 billion. So the minute you're doubling, tripling your exports, the job creation, because it's a labor intensive industry, is massive. Number one. Number two is, the value addition, which is there on the jewelry front, is quite high. Correct. So your net foreign exchange earning, if you're doing $100 billion, could be $30-40 billion, because you're basically exporting a lot of labor. So that arbitrage which is there is quite massive. So you're earning foreign exchange for the country, you're employing people. And thirdly, and very importantly, is that when you have commodities which are exportable, and again, we'll take the parallel of these, higher end cars, right? So you take Germany, which produces, say, BMW, Audi, Mercedes, Porsche, all these cars. It's because their quality is so fantastic and their domestic economy was very strong in the World War times, right? That they were able to export these fabulous cars all over the world, and there's a demand for it. So the quality and design element, which will help our industry if we are a net exporter, will also benefit the domestic economy.
Correct.
Because the whole product quality gets upgraded, because now you're having to compete with China, Thailand, Indonesia, Malaysia, Turkey, Italy. You have to compete with everyone if you want to be a serious exporter. So your quality has to be better. Your designs have to be superior. And of course, it's the ethical part of it, whether it's responsible sourcing, gold, diamonds, everything. So I think the economic benefit is massive.
Okay, Mr. Pete wants to come in, please, Mr. Pete.
Yeah, Sudesh, you were asking about the economics of it. So there are around, that is the estimate by World Gold Council, around 200 tons gets in through porous borders and things like that. So that is the scale of the problem. But what we tend to forget, and there are two important things. If because of higher customs duty or higher GST taxes, you push people from organized to cash business. Two things happen. Firstly, along with the GST, there are other cascading effects, other taxation that goes, income tax and other things which go, that also reduces. So government's revenue also reduces, not just because of the customs duty, but all these other taxes. That is one important thing that we need to keep in mind. And secondly, when you let this channel be attractive of smuggling, so to say, in common parlance, then who are you feeding? You're feeding the criminal element of the society. You're feeding the wrong elements of the society, which gets stronger. So these two important things we need to consider besides the number game. These two are very important.
Okay, just to put a little bit of context from the 90s, and it just is to give a parallel situation. Remember the days when we had mobile phones introduced in the country in the 1995 or so? 16 rupees 80 paise a minute was the call, and that was for the peak hour. 1680, 840 and 420, those were the three rates for calling. And since then, it took about 5 years for the first million mobile phone subscribers. And about 10 years later, we were adding about 15 to 18 million subscribers every month. That's what low duties, because we moved from a fixed revenue sharing, fixed license fee to a revenue sharing regime, and the cost came down for the industry. And that's the magic. And today we have 1 billion plus subscribers. So, Mr. Ahmed, give us a sense of what it could mean for the industry if there's a clear path, a slightly longer term path for lower taxes, and there's a clear vision on the part of the government.
So as our chairman has been mentioning in various forums, the first and foremost, if you see, like even Mr. Shah mentioned this earlier, there are a lot of countries which is of free duty, like United States, you have Singapore, you've got New Zealand, you've got UAE, you've got Kingdom of Saudi Arabia, Qatar, Kuwait, and China, for that matter. So these countries do not have any duty. Okay, though they have this VAT and other regimes, they have been treating the gold as hard currency. Okay, and that has really kept their economy going up higher and higher. All these countries' GDPs have been far bigger than what India is. So a reduction in taxation, when I say taxation, it can be both import duty and the GST, is definitely going to do betterment for the country. The parallel economy is slowly going to go away. There is no arbitrage between whatsoever is going to be created, and then the so-called smuggling goes away from there. And secondly, as Mr. Shah mentioned, the export part is something which India can really do well. Make in India and market in global. That's something which is the mantra which Malabar is doing as of now. That's where you see us vertically and horizontally growing all over. So I would say that India has got that potential, as rightly Mr. Shah mentioned, and as our chairman always mentions that, we have the artisans in India, we have the jewelry, we have the designs in India, which can be brought into the world. And I'm sure that sometime later or very soon, the gem and jewelry hub would be in India for the world.
Okay, Mr. Rungta, in terms of an average HNI, if I were to give you, and obviously you can't ask for who or what, any details, but in terms of a split for, the cash part for investing in gold, and then, through the official channels, what would typically the broad number look like for HNIs who are investing in gold?
Well, I would not claim to have any idea about that. But I want to take up on these points, and I want to take it up from the consumer side. I mean, so we talk about creating a economy where the gold is basically fungible, right? And when it becomes fungible, right? Then it acquires velocity, and we are able to do this. And look at the amount that is stuck. I mean, we have some 20, we are a very rich country, right? Some 20, I don't know, the industry stalwarts are here, but there's something like 25,000 tons of gold that the Indians are sort of sitting on, out of which I believe some 2,000, 3,000 tons are institutional. These are temples who can't possibly have an emotional attachment to those 2,000 or 3,000 tons of gold. Whatever measures we do, whether it is reduction in import duty, whether it is having a revamped, gold monetization scheme, we would need to supplement it with cultural measures as well. You can't solve a cultural problem with purely fiscal measures. We need to bring out this gold and this is not lying, unlike our thinking that this is lying with HNIs, these are lying with a lot of poor people in the country as well. Okay, and they could benefit when this becomes extremely fungible. They are using it today. There are so many studies which show that how poor people use, gold, basically at times of adversity, as is seen from all the news items that you will see regarding gold loans and things like that. My point is, unless you have as Mr. Pillai said, you need a policy measure that does not do just fiscal measures. Yes, you maybe need to increase the velocity, reduce the import duty, make GMS work. Okay, make the gold monetization scheme work. Today, nobody is making money from gold monetization scheme. It is okay to say 1/3 of public sector banks have, branches have to allow gold monetization deposits. But unless the banks make money from gold monetization scheme, they're responsible to their shareholders. Why would they do it? Okay, yeah. There needs to be some money that they can make. More importantly, consumers should see the benefit, okay, rather than holding it in musty cupboards where they might get lost, etc., where they can come out. It can be, you would know the value of what you hold. And I'm not talking emotional value. I'm talking financial value. Okay. You know what you hold. You know you can exchange. You can use it intermittently between consumption and investment. You can switch for some time. Consume. As you said, as my wife says, I cannot wear a sovereign gold bond around my ears. Right. So, but she can convert it into gold and wear it around her ears, and then reconvert it back into SGB. The policy measures, the cultural measures that we take need to address this entire thing. This conversion is today full of friction. We just need to remove these friction points. Today it is easy, probably, to buy a prescription drug. Then it is, you can't buy gold without so KYC now has become simple. Okay. But earlier the KYC itself used to be a big issue. So fortunately, of course, some work has happened and that has become much, much simpler. But my point is, a lot of work is being done. We have to admit that a huge amount of work has been done. But I think the impatience levels are now coming through because we're beginning to glimpse the possibilities. And the possibilities are exciting, but they're not here yet. So I think, it is this slow pace of furious change that is exciting all of us.
I love that term, slow pace of furious change. It looks like my request to women for a question or two has had some impact, because Mr. Pillai, I have a question from Justina. And Justina's question goes, lesser taxes improve compliances. So why does the government want to keep taxes high? It's the classic economic paradox.
No, I quite agree. As I mentioned earlier, you need to lower taxes if you want the gold India to be the gold capital of the world. So you must lower import duties on gold. I believe that it can come to 3%. You can also lower GST if you want. But we can do all that. But there are a number of others, what I call as the structural factors. One is the small issue, which I think Ashish Pete mentioned, that up to 500 grams of gold, if a person wants to monetize, no questions asked. Now, the real issue, I think, with government has always been, I think, which I've been at least tapping, is that we don't trust our industry and our people enough. You have to trust the industry. You have to trust the people. So allow 500 grams, then later on you can raise it to a kilo if you want. Because otherwise what happens is you are always worried that somebody is going to do some manipulation. That is, somebody who has got 10 tons of gold, he's going to give 500 grams of gold to 10,000 people and try to make that black into white. It's typical demonetization issue type of issue. So you have to trust industry. And I always believe that if you trust industry, you trust your own people, that's where you really make the move. Because I've seen that even when I was in Commerce Secretary, we trusted industry to deliver. We gave them the wherewithal to do it, and they've always delivered.
Okay. Okay, point taken. And so that was one of the questions that came in. In case you want more questions, of course, you're most welcome to ask them, and we'll try and take them to the voices, to the people who are with us today. The importance of billing for gold jewelry, how does it help the consumer, the seller, as well as the government? Mr. Pete, if I can request you to explain that. Why is this so critical for things to be through the official channels, particularly in the case of gold?
Right, Ashutoshi, if I can touch upon the earlier point of cultural
please.
relevance.
Sure.
Why gold has been relevant and important for 5,000 years. You have to realize that something which has been in the system for 5,000 years is there for some reason. Just by regulation, you cannot control it, because the intrinsic value of gold is non-destructible. You cannot create it. It is a store of value and hedge against inflation. So actually, the rural population who does not understand the financial vehicles that we have now, gold is the only financial vehicle for their savings, for their insurance, and for emergencies. So that's the cultural relevance is because of that. That's why even in most of the communities, right from birth till death, at each occasion there is some gold buying involved. At your naming ceremony, or even in some communities, when a person dies, there's a golden staircase given for staircase to the heaven. So I think that is the strong relevance of gold. Coming to a question about gold, I think for billing, past many years, the industry has consciously moved to the billing business. Cash transactions have reduced substantially, and the billing is critical for the consumer also, because that gives him the proof of purchase. Number one, if he has to take any recourse to, I would say, the Consumer Protection Act, he needs to have an invoice. From the trade side, I think billing is important, because that creates your track record for any jeweler, that he creates a track record for the GST that he pays, for the income tax that he pays. And post GST, a lot of people have been made available finances by the banks because of their online track record being available to the bankers, that a particular jeweler is paying so much GST and things like that. So if the billing is done, there is a collateral, I would say collateral benefit, that if the billing is, everything is done in billing, the jeweler will have the opportunity to grow and expand. Because the jewelers had this mentality that नहीं मैं गले पे बैठूंगा, जो भी पैसा आएगा मैं कंट्रोल करूंगा. The moment everything goes into billing, management and ownership gets separated, then he can expand. So then from unorganized to organized trade movement ho raha hai, that can happen. So billing has all these benefits according to me.
Okay, also the point about hallmarking, and Mr. Shah, I'd like to you to come in here. The importance, because there's also some talk that not all hallmarking is clean. There is some kind of hanky-panky that happens as well.
No, I would not agree over there. Hallmarking in the districts where it has been made mandatory, I think it's working quite smooth. And if you see, there are nearly 1 crore pieces which are getting hallmarked every month now, which is pretty incredible considering the number of pieces, the size of the country, the sheer logistics involved. So, and say if you compare to the West, where I would say 80-90% of the products are not as intricate as they are in India. Here you have jhumkis and necklaces with 100 and 200 parts. So it makes it a little more complicated to do the hallmarking process to begin with. But in spite of all the complexities, I guess since it went live in July and we are in January 22, in 6-7 months, I think the progress has been phenomenal. I guess the whole system has adopted to it quite quickly. And in terms of failures at hallmarking, right, it's less than 0.01%. So as far as the consumer is concerned in India, if he's buying a piece of hallmark jewelry, he's getting what he pays for. Okay. So I think that's really helped consumer confidence. Now it's only 6 months old. So I think though BIS has done campaigns, a lot of jewelers have done campaigns, the awareness across the country will maybe take this whole year. Because anything in marketing, it takes 1-2 years before, say, every consumer in the country knows that any piece of jewelry now sold in India is hallmarked and the gold is as ethical as it can be. So I think one is that. So I don't think there's any challenge on on the way it's being done. In terms of failure, also it is minuscule. And I must say another thing over here is that this fire test destructive testing that we're doing is as accurate, or it's probably the finest I guess testing method for gold today. So a lot of countries, Birmingham, of course, in UK does destructive testing. But besides that, there are not even 10 countries in the world who are doing destructive assay testing for every piece of jewelry sold in their country. So India will be one of them, which is quite unique. And actually, that's the large opportunity for us, is to export even our hallmarking method to different countries, where BIS can maybe replicate this in, I'm just throwing a name, but, maybe in South America, maybe in countries in Africa, maybe in the Gulf nations. This is the opportunity for them to even, and our certificate number, unique ID number, which is there, where a consumer can type in and can see, everything about his piece of jewelry is unique in some sense. Of course, it's still new and the mobile app has bugs and all that, but I think in next 2-3 quarters, it's going to become seamless. And like today, how a diamond certificate, for example, whether it's any renowned lab, you can type in a certificate, even if you've lost it after 10-15 years, and see the color clarity of your diamond. So that way, even in hallmarking, you may lose your bill and, whatever certificate you have of the jewelry. But, with the internet world, you can always loop your jewelry, see the unique ID number which is there, type it in your computer and very well know, even if you pass it on through generations. So I think hallmarking is pretty incredible, and it's only going to get better. Just like GST, it took 2-3 years before it's become what it is today. But hallmarking also, I think it's going to actually be a game changer for our industry across the country.
For the industry, let's ask Malabar, and from the industry perspective, Mr. Ahmed, what steps, one, of course, your point, if you want to add something about the hallmarking part, and second, what steps should the government take to ensure compliance across states as well for the hallmarking part?
Hi. So we were just trying to add on to what Mr. Shah and Mr. Pete spoke about the hallmarking part. We've been talking about this in various forums again. We would like to recommend that even the state GST department should be given authority to verify the HUID markings along with the central government authorities. That would add on. That the state should take the equal responsibility in finding out how the hallmarking is going on in each individual state, and the state should be given a merit for that tracking. The tracking facility, again, the e-governing policy, the tracking facility by the government would be one of the measures which would add, as Mr. Shah and Mr. Pete mentioned, though the hallmarking has just started its drive, within 6 months of time, this is incredible number, which is like getting hallmarked, which is a great move. And secondly, mining to customers' delivery, HID mark tracking shall be facilitated. It has to be facilitated, right? For example, Malabar has been running this in different forums. We've been talking about. We've been called as a responsible jeweler now. A responsible jeweler means we have the responsibilities not only of sourcing the gold responsibly, but also in every step of our jewelry process to the end person who is employed in the Malabar. We have a responsibility. So the responsible sourcing is when we talk about responsible sourcing, we talk about sourcing right from the mining to end customer. The delivery being given. We have the track. We ensure that we buy gold from the right place. There is no conflict of gold in any of the purchases which we do, because that's our raw material which has been used for the company. So again, there should be the chairman keeps mentioning about this fact in each stores and each showroom, that please cultivate this culture of teaching the customer to purchase the invoice. Please ask them, when you have to start teaching them, why is this an important thing? Responsible person. Being a responsible person, it's your responsibility to have an invoice for the product what you purchase.
Sure.
Okay. So every showroom in Malabar has been trained. Our staffs have been trained to educate the customer the importance of the bill.
Government is starting.
And this is what we would want the government also to do. Educate the citizens, the requirement, why should there be a mandatory requirement of an invoice when you purchase a jewelry.
Okay, point taken. Mr. Pete, I understand you have something very urgent to attend to, so you may want to leave.
Yes,
but
yes.
Any quick question on where do you see maybe gold import duties another year, maybe by next budget or so, by next end of financial year?
I think I see another drop of about 3% from the present. The surcharge is slowly taken up. Just before I leave, sorry, my apologies to everyone. Unfortunately, I am traveling, so I have to leave. Coming to the hallmarking part, since I was in the advisory and the expert committee, my 2 cents. I think the law amendments is to be made easier. If the compliance is not made at the ground level, it's going to hit the jewelers, with compliance difficulties. And if a law is set up in that compliance is going to be difficult, there is going to be corruption which might come in, and difficulties will be faced. I will give you a small example. The jewelry trade works on sending goods on approval for the customer to select. Now the law states that you cannot even hold a single piece without hallmarking. We can understand that every piece that is getting sold has to be hallmarked and with an invoice. That is understood and everyone agrees to that. But if I have to show the jewelry piece to the jeweler before I finalize or before the customer finalizes, then it is not allowed. That can be confiscated. So I just give you a small example as to what small tweaking needs to be done in the law. And we have suggested that to the minister also, and hopefully has promised him a legal committee to look into the changes that are required. That was my thoughts about it. Thank you so much for inviting me and having me interact with all the stalwarts here. And my sincere apologies that I have to leave for something urgent. My apologies.
Can I request you?
Thank you.
Mr. Pete, can I request you to just be with us for another 30 seconds? It's important that we capture this moment for a picture. If you can put up your best smiles, everyone. Can I request everyone to put up their smiles so that we can just take a picture for posterity, because we can't meet, unfortunately, these days. Okay, thank you so much. Thank you indeed for being with us, Mr. Pete. We'll get back to you again.
Appreciate your understanding. Thank you.
Sure. Sure. Mr. Rungta, you mentioned about, I love the idea about the fungibility of gold. And look at the kind of liquidity it adds to the system and remove the way it can remove friction and possibly be accessible. That liquidity can be accessible by anyone and everyone in India because they hold gold. Is there anything that policymakers can look up to in any other part of the world that could be somewhat similar? Can you, if you have any knowledge of that?
So I think if you look at the friction points, these are essentially, as sir would say, as Mr. Pillai sir would say, these are all policy friction points. Okay. I mean, we made much of this 500 grams being allowed. Now there are old income tax circulars that allow, you can go up to, I think it's 500 grams for unmarried women. I'm not 100% sure. Okay. But there are certain number of grams that are allowed for married females, unmarried males, unmarried females, etc., where you don't have to explain the source. These circulars exist. These circulars are administrative practices. They are not law. They maybe to instill confidence. So you take away, somebody needs to study these friction points and, take away these friction points one by one. Okay. Why don't people come out with their old jewelry? So if I have old scrap jewelry lying, why don't I come out and give it to GMS today? Okay. That's because there is no place where I can go and give it. It's very, very extremely cumbersome, okay, to find a branch that deals with gold monetization scheme that will take it, that will go through the test. So it's not that the government is not aware. As I said, lots of action is happening. Okay. Maybe we need more communication about those actions, and these friction points, especially the regulatory friction points that are there. Okay. Those need to be, especially the one about income tax, because it has been an asset. It has been in the works for so many years, and it was not accounted earlier, even though you may have bought it with perfectly accounted money, right? A person, when I started work, I have bought jewelry with perfectly accounted money, right? But I may not have the bills, okay? And there should not be any necessity for the bills up to a whatever limit that might be there, that can be correlated with whatever incomes that I have. My point is inter se fungibility, from moving from physical gold to electronic gold, again converting it into consumption gold, a jewelry, converting that and having the confidence that these are the values at each state of the, and what am I losing at every stage, okay, and what am I gaining at every stage. I think working that out, okay, is something. Liquidity is given. We don't need a world model. Liquidity in gold, fortunately, traditionally exists. You don't have to create liquidity. You just have to create fungibility.
Mr. Pillai, having been part of policymaking, I know it's very easy to say it in hindsight, but in the light of the changes that India is seeing in the bigger picture, How can this be approached differently? And maybe, if I may use the word in a slightly figurative sense, bury the past.
See, very similar, analogy would be on the customs. Earlier, when I remember in 2005, 2006, when I was in the Commerce Ministry and we sat down with Revenue Department to work out, every single shipment of things which are going were being physically inspected by the customs. So you had to, containers were opened up, people started looking into, rummaging through packages and so on and so forth. And then we set up this risk management system, which over the years, and thanks to I must say, the customs, now the risk management system works so well that almost 90%, 95% of exports, imports take place without any physical examination at all. It just goes through. And only the risky ones, which you have a set of parameters on which it comes, only those are checked. So similar to this is what you have to, what I earlier mentioned, you have to start trusting industry and the people. If you don't trust your exporter, you don't trust your importer, there will always be the fellow who's going to do something hera-fairy. And you have that person, you can come down very hard on him. But 99% of people are basically honest businessmen who are doing their work for, and you have to trust them. And if you do trust them, then you have this, like income tax. Look at, I've not had an assessment of mine for the last 20, 25 years now. I think many of you, you've not, you just filed your return, it's got through and it's clear. So you've come to that system where earlier, the first few years, every assessment used to be cross-checked and used to be called before the income tax officer, and you have to, sit and go through the numbers before him. All that has gone. So same way, the gold system, the analogies are there. Do the same thing here and say that 500 grams, a kilo, if you want 1,000 grams, and say no questions asked, nobody will come and inspect, except where you have very specific this thing, etc., which shall not be more than 0.2% of the whole, based on specific intelligence, etc. Only those will be done. And then you see the difference it makes.
So trust factor, it boils down to the trust factor with the consumers, with the industry, that becomes critical. Mr. Ahmed, one question a little bit about the way, wanted to understand from you in terms of the benefits for states. While central government, it's very important, we're talking largely the macro picture. How does this benefit the state governments as well if retailing of gold and gold jewelry is more through the organized channels, and the gray market can, well, if not completely wiped out, mostly wiped out?
Yeah. So as you all know, the major business, the gold jewelry business, the hub or the highest retail sale happens in South India, and especially in states like Kerala, Tamil Nadu, Andhra, and Andhra. The numbers are as compared to North or to the Eastern market. The retail jewelry business is very high. That adds on, when I say the retail business adding on, that means the tax, the kind of tax or the GST or as of now, if it's 3%, which if it can be lowered to 1% or 0.5%, whatever it is, the government decides upon. That's a benefit. The number is going to grow more and more. The parallel business which is happening in retail in this industry, especially in South, is going to shift their gears to the organized sectors. You see a lot of retail jewelry growing up now. The chain jewelers, especially from South, like you can see our growth, for example. We started our growth right from a city called Calicut here, and now we're all over the world. That's basically because of we've always focused on having this business on the right path, in an organized path. The hallmarking, when I was speaking last time about the hallmarking, we also would want to mention that, we were one of those few stores which started in 20 years, before 20 years, when we started this business, we got into the hallmarking. And each and every jewelry has been hallmarked right from that stage. 100% has been hallmarked. Now, why am I talking about this is like the question, it has too much of relevance to your question, because we once were called the South Indian jeweler, we could grow up. I would say we are growing up globally because of because of having a business in the right path. So yes, the state government should definitely give a push to the retailers in the respective states also to move so that helps the retail jewelry and the manufacturers to do the business on the in an organized way. There is a lot of potential left over. There is a lot of untapped retailers who still are wondering how to run their business because of the various taxation, which is when I say various taxation, the customs duty and the GST, which is there for this industry.
Actually, just to
There
add
is
to
one
that,
thing I would like to. I'm sorry, Ashutosh. There's one thing which I would like to add to this is that there's something which we've been talking long time that of course now the new exchanges have come and definitely it's going to give a right path to the gold pricing. We have been always stating about this one India, one gold price. It's a unique price for the retail gold, and that's something which we have introduced from Malabar, and I'm sure that the government, we've been speaking in the government forums also about that, to decide that there should be one single pricing for the retail business which we do. So that's something which we would like to add on this forum also.
Okay.
Thank you.
Okay, Mr. Shah, a little bit about the larger picture, since you also referred to the India being the capital for gold jewelry and gold trade, if that can be done. The global picture also tells us that, after what's happened between US and China, and, the preferential trade agreement with Hong Kong has ended, that perhaps could be one reason why you see the spurt in demand for jewelry from India. How can India how could India take advantage of this situation so that that dream that you spoke about could be realized?
Ashutosh, India is on that journey of signing FTAs. Commerce Ministry has really taken, I would say, very aggressive steps, to sign FTAs with, say, most of our large trading partners. So I think, and US is our largest, export nation. It's half the, diamond jewelry business of the world.
Correct.
One of the largest gold jewelry markets. So considering China, which is the second largest market after US for everything, is, say, close to us, as far as gems and jewelry is concerned, because they have a huge domestic industry. It's in our interest to sign FTAs with America, Canada, Australia, UK, especially all the countries where we don't have a language issue, for lack of another word. And even the larger markets, especially with GCC, there's a FTA which is being signed with UAE also, and that should be, announced very soon, I hope. So all these free trade agreements are really going to help our sector in a large way, because right now most of the countries are looking at moving their business from China. So I mean, it's up to our country actually to make sure that we do these FTAs. And as an industry, we have to ensure that in these FTAs, gems and jewelry is one of the preferred, I guess, commodities where the tariffs are lowered or made zero in the importing country. But if that happens, I mean, this is a once in a lifetime opportunity, I would say, for all our exporters, because COVID has happened and there is an anti-China sentiment. And now it's up to India to take maximum advantage of it, and up to our industry to also capture whatever we can in this bargain.
You almost taken the words away from my mouth, Mr. Shah, because I was going to say this is a once in a lifetime opportunity. What spurt could this mean? If you could just quantify or maybe give a sense of that.
No, I'm like I said earlier. See, there are several things which can happen. One is, the shift. Okay. Second is, the minute tariffs come down, now suddenly we get into, say, a territory which is unknown for both countries. You take, let's take the example of Australia. Okay, like Australia is rich in minerals, obviously, we all know that, but they don't have a large, robust jewelry manufacturing, base. So traditionally, they have been importing from various countries. India is one of them. You have the usual competitors over there. Now, if India, for whatever reason, because we import a lot of commodities from Australia, and if Indian jewelry, say, has a benefit, if it's made zero, for example, and say one is the opportunity of moving all the businesses which they import from say other countries to India, but a larger opportunity also exists in doing a lot of new things which was never done before because of the 6% duty, which is there today. So I think both can happen, and so imagine we've reached in 2021, last year we'll take, okay, say $40 billion with the tariffs, with all the constraints we have in India, everything that we have, we reach 40, from 0 to 40 over the last 50 years, or variety of reasons, entrepreneurial spirit, government support, ATHSC, I mean, everything that we mentioned in the last 1 hour, are all the reasons we grew from 0 to 40. Now, with the anti-China sentiment, if the government, does some more reforms on gold policy and all that, I mean, 40 can easily be 80, So I'm just saying that it's up to us now to, capture and do the best we can.
Okay. Mr.
Anyways,
Pillai,
on that note, Ashutosh, even I'll have to leave. I have a flight to catch. So,
Okay.
thank you very
We won't
much.
hold you back.
Thank you all the fellow panelists. Thank you.
Okay, Mr. Shah. Thank you so much for being with us. Mr. Pillai, in terms of the preferential trade agreements that we've been signing lately with various countries, how does that change the trajectory for gold jewelry demand from India? And particularly because the Indian design seem to have some magic about them.
See, it's a question of, I think, again, here I mentioned that you must have a consistent policy. Consistency is so critical for trade. A trader doesn't want to know that today, import duty is 5%, tomorrow it might be 8%, day after it may be 3%, then next year it can be 10%. That doesn't work for how he's going to plan his business. So you have to have that consistency. Governments for some time have had one clear policy of, and I remember during, at least when I was 2004, 2009, we had the FTA with Singapore, we had the FTA with Japan, FTA with Korea, FTA with ASEAN. There are some pluses and minuses. There are some give and take on both sides. Both sides gain on certain fronts. You can, of course, improve upon those FTAs definitely more. But you can't afford to keep saying, I won't do this at any one time, some part of the industry. So there is competitive advantage for us in some countries. I mean, just looking at Europe itself, I mean, they would like, if they want to export, they will say, we want to export cars into India. They want to export wine into India. And you have to look at it and say, what are the trade benefits you're going to get? Maybe you can export gems and jewelry, textile exports, leather exports, and maybe the little bit of the wine, especially because they are looking at the much cheaper wines, which are, which compared to our India, Sulu wine and so on and so on. You can make some protection for that, but there are much more expensive wines, which it's not in the market, it's not in the same competitive range as for Indian wines. But you have to, everybody wants only win-win situation. Every industry wants a win-win situation than an FTA. If you have that, you can't have an FTA. So that is very critical. So you can support your industry, you can give them support where you feel you need to. That is a separate issue. But FTAs only come on a give and take. It can't be a one-way street.
Correct.
So I'm all for it. I think it's our tariffs in the last few years have gone up. You've seen that everywhere it's protectionism all across the world. So this is, in one sense, a bad time to look at it. But maybe if you were to reduce customs duties in India right now, perhaps it's of the greatest advantage. Well, everybody else is raising their rates. If you lower it, you tend to get that competitive advantage, and a lot of industries will flow into India.
Okay, that's an interesting way to look at it. Think against the tide. Mr. Rungta, the next question to you. How could India also promote gold as an industry better? And particularly because that opportunity for investment continues. And in these times of inflation, we are talking of some countries, almost at a 40-year high inflation. This is a great time for gold to be used as a hedge.
I think we need to be careful about whether we really want to promote gold, because let's not forget we don't make any gold ourselves. So, I mean, it's one thing to say we want to export gold jewelry because at least there we are exporting our services. Okay. In gold, we have no competitive advantage if you talk pure gold. Okay. So, I would leave that really to other countries which have advantage on pure gold. On jewelry, I think the whole thing comes from confidence, right? And traditionally there has been confidence. Okay, I mean, culturally, traditionally, there is confidence. If we can supplement the policy package measures that gives the domestic public a lot of confidence, that I think, as Mr. Ahmed and other people have also said, when there is a large domestic market that has confidence, it gives a boost to technology, it gives a boost to designing abilities, it gives a boost to innovation, and that will help us dramatically when we go overseas. Because tariffs, etc., I'm reasonably sure that you get a duty drawback, etc. So maybe the tariffs are not the ones that is affecting the export as much, right? What probably, I mean, the sheer size of the industry, if it grows, and if we are able to recycle that old gold that we have, and we are able to apply all these innovation and technology on that through by giving it some incentive through a package of policy measures, I think that really could help action up this whole space.
Okay, that's one way to look at it. Okay, but whenever we're talking gold, there's a dash of emotion that is involved, because gold has a sentimental value, and the economics associated with gold has, as I mentioned, that dash of emotion. Ask a woman and you'll get the answer very clearly. So it's very different from other countries. So, Mr. Ahmed, I'd like to ask, despite that emotion versus economics, what are the lessons that India can learn from some other countries?
Yeah, so I think it's the same what I mentioned earlier. Like there are lot many countries which carries zero duty, right? I mean, they've been the bullion, the customs duty for those the bullion for those countries has been zero, but there are definitely the various VAT and I would not say GST, some kind of charges which is applicable for the jewelry. That's something, and then zero duty for bullion will definitely make India at par with all those countries. That's something which we have to learn. Like a country like China, the kind of imports it has, the kind of jewelry it sells. We are the second largest consumer for some period. China was leading than India. There, the duty is zero. They have the various avenues to charge the jewelry part. That's different. But look at US. The number of countries which I mentioned earlier, these countries have been doing well in terms of this industry has been doing well. Their GDP is doing well. They are all I would call one of the US as one of the wealthiest country in the world. So they've thought about it long time before. It's high time that we in India also think about it, and then make again. Again we repeat this word: make India the world's gem and jewelry hub. As our chairman always mentions, make in India, market to the world. That should be our lookout for next coming years, and then I'm sure that we will be able to succeed.
Okay, very interesting note to end this conversation on, because the ambition is very clear. Industry wants to lead the country and make India as or at least that's the call, that's the industry association and individual companies also mentioning it, make India the capital for gold, gems and jewelry. The ask from the government is to make import duty, well, zero, if not zero, maybe close to zero, so that the grey market can be wiped out, if I may say so, and so that the consumers, there's an incentive for consumers to go ahead and buy through the official channels, not be swayed by, the odd jeweler telling them, well, you're going to save some GST, 2%, yeah, whatever, 8-10%, 10% GST bach jayega. So that is not something that the industry wants happening. Ultimately, if the government and industry can work together, it is for the benefit of everyone. Thank you so much, gentlemen, for being with us. Mr. Ahmed, Mr. Rumta, and Mr. Pillai, thank you indeed for being with us, and Mr. Shah, as well as Mr. Peter, who've left us. They had something very urgent to attend to. Thank you indeed for being with us, as always, on the Economic Times. Thank you.
Thanks.
Thank you.
Bye-bye.